Hi and welcome. Um, First of all, just a disclaimer, I'm not a financial advisor, so don't take this as financial advice. Just use it for educational and entertainment purposes. But what I'm going to bring to you is a few facts, and I'd like to make you aware of this. I am going to talk about money in general and retirement, which is obviously approaching soon, and I'm going to talk about a lot of different aspects of money, investing, anything to do with that. So if you've got anything you want me to talk about, you're welcome to say in the comments. If you agree or disagree with what I'm saying, you're welcome to disagree or agree. Not everybody thinks the same, but you are more than welcome to say what you think, and I will obviously listen to what you think. But yeah, it's everyone's got their opinion on everything. But today I'm going to talk about Nvidia. So Nvidia is an American company. They're doing really well. They are growing extremely quickly, and some people have the opinion that they've grown too quickly. They've outgrown their net worth. Look, their market cap is about 3.4 trillion, which is them and Apple are vying for the top spot on the market cap. But what happens is the share prices basically go up and down with the earnings and the potential earnings. So earnings is a huge thing, and price will sometimes move in the opposite direction, but eventually you'll actually see that if the earnings go up year after year after year, the price will go up. Okay, so what I first looked at was for the full year. I'm looking now for the full year to January 2024, which is the 2024 financial year. And I compared that to the results we have so far from Nvidia, which is the first 2 quarters of 2025. In other words, the financial year that we're currently in is going to end at the end of January 2025. So today, the 31st of October, is the last trading day of Nvidia's third quarter, and then they will bring out results on the 20th of November to give us then their third quarter. So what I see when I compare a full year to January 2024 to the first 2 months of first two quarters of 2025. When I look at that, I actually see, when I compare it, if I look at 2024 to January, the full year, it's 60.92 billion. Whereas if I add together the first 2 quarters of 26 billion and 30 billion, it comes out with 56 billion. So you'll actually see the first 2 quarters, the revenue was almost as much as the same as the previous full year. Okay, so it's about 4.9 billion behind, but it's very close. So that was the revenue. The income was 29.76 billion for the full year. The first 2 months of this financial quarter, we had 166 and 148. 16.6 and 40.8. So it's 31.4 billion. So if you look at that, the income is actually more in the first 2 quarters of this year than it was in the full year for last year. Okay. Then I looked at the margin. So the margin last year was 48.85. That was for the full year. This year, what I've done is I've taken the 2 quarters. It was 57 and 55. I just took the average, which is 56. So the margin is up. Profit margin is very important. I mean, some retailers run at 2%, 2 to 5%. So they have to turn over a lot to make a lot of profit, whereas Nvidia is more than half of their turnover is actually going to profit. Then I looked at the earning per share. The earning per share for the last financial year was 1.3 cents. This first 2 quarters added together is 1.29. So in other words, they've earned in the first 2 quarters almost the same as they did in the previous year. So this company is growing rapidly, and they're definitely not stopping. So what I see is we've still got 2 quarters to go. Maybe after the third quarter results, I can just relook and then see how we're looking and compare maybe the 3 quarters to the full year. Um, yeah, I mean, there is a possibility they can earn 5 or maybe even 6 cents for the full year, which is a huge increase over the previous year. So, but what I also see with Nvidia is the demand is far outstripping the supply. The Blackwell chips, they had a problem with it, there was a small bug which they have fixed, and the demand, they can't keep up with the demand. And everyone knows when demand is outstripping supply, then prices go up. They have a huge market as well, and also they don't just make chips. They they do software. They're a start to end solution, and they are fully using AI, and they have a lot of partnerships. They have partnerships with a lot of the big tech companies, um, and they are actually helping the other companies and obviously helping themselves to a wider platform. They even looking obviously in within USA and overseas. The nice thing as well is they've been doing a share buyback. They've actually been doing it since at least 2014. And they've been consistently buying back shares every month. But I see they have increased it. They have started increasing it in the last couple of years. And they have approved a 50 billion buyback this year. So what the thing is with buybacks is it actually increases the share price, because the reason is because they're taking shares out of issue. They're buying them back. That shows they're confident in their own company. So they're buying back the shares, so there's less shares in issue. So each share becomes slightly more valuable if they continue to do that, because there's less shares. It's the opposite of if a company issues shares. Sometimes a company wants to buy another company and they don't have the cash to do it. So they issue shares. So in other words, they increase the share issues by maybe 100 million or whatever to get that money in to buy other shares. So they issue that to shareholders, but then the earnings, because there's more shares in issue, then the earnings are diluted. So then they have to earn a lot more with the new acquisition. So if the new acquisition doesn't bring in them, doesn't grow as they expect and bring in a lot of extra money, then it's not worth it to issue shares to do that. But this is the opposite. This is buying back shares, and it's similar to paying a dividend. It's similar to paying dividend because it increases shareholder value. Same as paying a dividend. Nvidia do pay a very, very small dividend, um, so you get something from them. But doing a share buyback will be a lot better, because there's no tax on dividend. There's no tax on share buyback, where there's tax on dividends. So in other words, in the USA, your share tax is I think 15 to 20% of something that you have to pay when they pay out the dividend. So there is something there you have to pay. Whereas if it's a buyback, it just increases your value in the company. So yeah. Um, so when I look at that, if you look at that facts, um, I think that Nvidia is doing really well, and even though the share price has appreciated, I I fully expect the price to be between. I'll, they announced their full results for January, the year and January 2025, in February. I think it's February the 20th. So towards the end of February, I expect the share price to be between $160 to $200, and at least be that till the end of 2025, and then obviously possibly going over $200 before the end of 2025. 2026, it's the growth rate is still keeping up, and what Nvidia also do is they're already working on the next year's technology. So they aren't like bringing out new technology and saying, "Oh, there we did it." They're continuously working on new products, new partnerships. They're continuously growing by doing the right thing and making more profits into the future. So I don't see them growing, them slowing down. Maybe 5, maybe 10 years from now they might slow down a little bit, but I mean they no, they're knocking it out the park. So yeah, so I what I would do, and like I say, I'm not a financial advisor, as I can't I'm not allowed to give you any advice. But looking what I see, then it's definitely worth buying into Nvidia, especially if there is a pullback. There was a pullback yesterday to about 137, and then it went back up to 140, and it was at 145, and it went down to it looks like it's going to open about it, yeah, it looks like it's going to open a little bit lower, maybe 138. But I would definitely look at buying in as it goes lower. Um, yeah, I mean, I bought in a little bit lower than that, and then I've been any pullback, I then trying to accumulate some more, because yeah, it's going to be worth a lot more in the future, definitely. So, like I say, not financial advice, but definitely a share to keep your eye on. And if you haven't got any, it's well worth buying, especially when it pulls back, because like I say, it's next year it's going to be probably 160 to 200. So now it's at to me it looks like it's bargain price. Okay, so wonderful. Enjoy, and yeah, let's see what happens. Thank you.